Okay, good morning and once again, everyone. Happy Monday. Hope your weekend was restful. Let's see what we have on deck here this morning, Monday, April 27th, coming down to the end of the week and the month. Okay, one second. All right, so today is Monday, April 27, 2026. And again, this is the audio addition to the Daily Trade Strategy Brief. NFA Compliance Rule 2-29C, subparagraph 1. You know it, love it, live it. Past performance not indicative of future results, but I'm sure they rhyme. Do they rhyme or is it a crime? We'll see. All right, good enough. So today again is cycle day 2. There's cycle day 2 on deck here today. And as in perfect form last evening, we got the requisite Globex opening, but it was really actually a relatively shallow opening in comparison to the past, 3 or 4 or 5 week Sunday evenings. So again, we talk about that shock absorber effect, right? Markets really absorbing all of the various news and so forth, kind of looking beyond perhaps the conflict and looking ultimately for some settlement deal uh, down the line here. But again, it's beyond my pay grade, so all I can do is continue to read price action to where it is and see if we can read the tea leaves, day by day, and again frame out the market on each day and then take it from there. So today is a frame out of a cycle day 1. Excuse me, I'm cycle day 2 rather. My bad. All right, and normally we would be expecting some sort of backing and filling, and we did get that already during the overnight action. All right, we had our, again, a little gap down here. Again, ES is here on the right-hand side, so we'll take a look at that. But if you're trading the NQ, again, it's the same thing. All right, actually, the NQ has been the big leader over the past several weeks, and all right, but in any event, we had a little gap down and then didn't really hold, and we ended up making again another all-time high, but this stays during the RTH session. Some people claim, right or wrong, that the all-time highs are more uh, meaningful if it's done in the cash session versus Globex futures. You make that call. Doesn't matter to me one way or the other. Prices here are sitting at or near all-time highs, consolidating at or here no, near all-time highs. So as far as I'm concerned, you know, this is the rhythms that we have. Today's line in the sand here is 71.70, which I laid out, and just essentially trying to get back down through these lows here off of Friday's kind of consolidation in this area here. So prices only came down during the overnight to 71.50 and then kind of popped up. Now, um, during the overnight, very early during the overnight, uh, prices did tag within a whisker there, probably a tick of the, actually a little bit, 3 ticks or so of the D level, right? Right. So is that valid? All right, touch. Yeah, it's a valid touch, but of course it's during the Globex. So question, always arises as well. If we get it, is the D level still a valid level? And the answer is yes. it is a static level, does not change in this format here from the prior range, does not change, so it is valid. Okay, so though this was the first touch during Globex, we don't have a first touch yet during RTH. So if we were to get a price move back up to that area, again, you may want to consider that as a potential trade opportunity for yourself. If in your plan you have the D level money box, right, as part of your plan outline. All right. So today being a cycle day 2, we are looking for some MATD rhythms. Again, we already have a bit of that during the overnight session. Down, up, back down, up and down, oscillations. So we'll just take that, carry that forward into the RTH session. Let's see if we can identify some areas and levels aside from what we currently have. During the overnight, one of the trademarks of an MATD is somewhat of a balancing type pattern. And we see that already, a kind of a delta shaped pattern or an inverse delta. All right, so that's kind of a footprint, if you will, of a balancing type rhythm. So that coincides with our cycle day 2 expectation. All right, so I would, again, I would, in terms of the overall anticipation, would be early, would be just to rotate back within the current framework, right, of the overnight high, overnight low. We can consider that as our sandbox initially. Now, again, speaking of the sandbox, all right, the sandbox, just to clarify, the sandbox can be any range that you select. Now, that said, you don't want to be just taking any arbitrary range and saying, well, this is the one I selected. But rather, you want to see, well, where has price been trading, right? And again, selecting, some prominent high low, and then saying, well, the market has maintained, you know, price action within that range. So that becomes our, upside and downside edges. I mean, all what we're doing here, right? And again, I'm using the term sandbox because it's just kind of to me, it's rather than saying, oh, a range trade, you know, trying to make it a little interesting, something that you can kind of, like tag with, in your mind. Hey, that's the sandbox. Oh, well, what does the sandbox mean? It's our playground. It's where the market has been trading. That's all that kind of the idea of the terminology. If you want to continue to use terminology like range, which is kind of dry, right? That's the idea of like look above, look below, and fail. Okay, that term's been used forever. Maybe new to you to some degree, but it's been used forever. I like using the term peekaboo, right? So it means the same thing. So just trying to make it interesting. So you kind of remember these things. All right. So anyways, as you can see where we are in our sandbox area. And by the way, the sandbox does not need to be, although it can be. Notice the terminology I'm saying. Everything, all the phrases and all the kind of the explanations that I try to provide. And this is how I was taught. So it's not that I'm trying to be elusive in any way. How I was taught is always to have some flexibility in the terminology that you use, right? There's no, at least again, from what I've learned and my perspective, there's no hard line in the sand. We call it a line in the sand, but again, if you think about the sand, right, it could be quicksand. All right, think about even that. It's a line in the sand, but it could be quicksand. So in other words, that level does not need to hold. It's a reference only. Okay, so again, this is how I was taught years back. And phraseology is really important. How you phrase something to yourself about whatever it may be within the world of trading or within your daily life, right? Think about how you phrase things, and it could change, it could change your emotional state. Okay, I don't want to get into that. That's a whole other area of study, but it still applies. It can change your emotional state. It can, harden an opinion. It can soften an opinion. It can, again, my idea has always been have an opinion, but be flexible with it, right? Particularly in trading, because if you're hard, if you're a perma bear or a perma bull, you're not going to survive too well in this business. But if you're a flexa bear, flexible, you probably, survive a lot longer and be much happier. So in any event, again, our sandbox here, we can outline, and again, we can certainly use the value high, value low zones as a default if you're having trouble determining, a particular sandbox, right? Because the value high, value low area is essentially 70% of the volume activity, that can be used very effectively as a sandbox. So thinking about that. All right, so let's see what the market has in store for us today. I'm going to start the day certainly as a neutral participant, observer, but again, flexible to, right, what the market has to offer us. All right. I think we have everything set up here properly, and we'll take it from there, one trade at a time. If you're looking for an initial trade, again, the A10 over here did touch during the overnight. What was that? Yeah, that was during the overnight, but again, during the RTA session has not touched. So that could be a play for us if we get a move back up there. All right, dingity ding ding, market's open. Let's have a good day. All right. Again, if anybody has any questions, comments, feel free to post. Engagement is always welcome. So we'll see what happens here. Again, prices would need to, I would say, kind of get above that 98, 7,200 area. Clear and convert that upper zone. All right, with a sustained bid to see if we can get a push up to touch the overnight high, which is around 7208. That would be that. All right, on the flip side, the bears would want to break down through these, 80s, 85 area for a push to retest the overnight lows. So that's kind of the outline for us early on here. Crude oil did have an early short, and looks like that hit first target and then broke even on the balance, and we're waiting for the opening range for ES and NQ, and that's what we got. Everybody awake? I know it's Monday morning. The weather is beginning to improve here. Also, I didn't mention it, but big earnings this week. Big earnings week, especially the 5 of the Mag 7. Again, I outline those in the daily trade strategy. So also we have FOMC on Wednesday. It appears this is going to be Powell's last finale. That guy Warsh is expected to be approved. So that would mean that Powell's last fling this coming Wednesday. It's a presser day. So that's on Wednesday. And we got, again, a slew of earnings. We're in the midst of earnings season anyways, but a slew of earnings that could have market impact. So kind of keep that in mind as each day unfolds, what's on deck and what could be impactful. A lot of times the market's just kind of, when we're in this earnings season period, um, market is it kind of, aside from any external events, overseas there that could rock the market at any moment. Again, all these firms, have all the managers and so forth. Again, they have their positions, and just kind of waiting for earnings season to see how that plays out. So the releases. There's usually not a lot of commitment ahead of an earnings release from money managers. I mean, they already have positions. Number one, two, they just any order flow that they submit tends to be what we call, when I was a market maker, we call that maintenance bids or maintenance offerings. So if somebody's been, think about it this way, somebody's been on the buy side, like an institutional player, somebody's been on the buy side, and of course they have a position, and so in that particular stock, you know, they get some weakness coming in on a particular day out of nowhere. Just it can happen just simply because there's no active bid out there, kind of holding things up, right? And so if the market kind of gets, if a particular stock gets dislocated, just lack of any significant order flow, what would happen is an institutional player that's been accumulating it, what do? They have what we call, back in the day, we call it a maintenance bid. So they have bids kind of underneath the market, should the market kind of break in some direction, down. And so they may not be actively, continuing to accumulate, but they have a maintenance bid. And I think that still applies here, collectively in the market. If you think about that concept, I mean, the market's been, you know, it's had a bid, right? It's pushed up to these levels. Do you actually think, I mean, think about this, and, do you actually believe that the market is just going to fall apart if it, if we get a dislocation down and like, and stay down? No. All right. I mean, the market, even on the, collective, basis, has a maintenance bid. It may not be, you may not see it or anything, but there's a bid underneath the market. And so when you get these, like, gap down or dislocations, temporary dislocations, there are mutual fund money managers out there waiting to buy that, you know, because they're not going to let their positions just crap down. you know, it's not how it works, you know. So there's always a kind of a maintenance bid underneath the market. That's why the shorts don't have the shorts have a short, not to be, no pun intended, but the shorts have a short shelf life. Right. Even in, you know, bear markets are, their best, but really the market is always, skewed to the long side, even on a corrective move like we recently had. Yeah, shorts had a little bit of gameplay there, but ultimately in the scheme of things, it was just, you know, kind of a garden, bigger picture, garden variety pullback that allowed the big institutional players to do what? To reload a lot of the tech stocks, and other names that they perhaps had lightened up on. And I say lightened up, not exited. And that's the thing. These people are always these firms are always invested. All right. So they may lighten up their position. Why are they lightening up on one position? Because they're using the proceeds to move into some other sector. Money has to go somewhere, right? For you and I and others, perhaps when we sell something, right, the money goes in our cash account. We sit there, for the next trade, right? These institutional players, that's not how we work. When they sell positions or they lighten up on positions, doesn't mean they're bearish on those positions. See, this is the fallacy, right? People think that, oh, they're selling tech stocks, they must be bearish on tech stocks. Just using the tech stocks as an example. Not necessarily the case. They may have gotten a little bit, overvalued perhaps to certain metrics that some of these mutual funds have, right? And they say, okay, we're kind of heavily weighted, in the tech area. And again, as prices go higher in those particular stocks, their weightings increase, their percentages versus other stocks, right? So if you think about it from that standpoint, what do? I got to lighten up on some of these tech names, not that they're bearish on them, but the percentage of our allocation has increased relative to another area. Does that make sense to everybody? I had a long conversation. My next door neighbor's a money manager, and yeah, we've had numerous conversations along these lines, and you know, so uh, so what happens is, they move out of certain names, or at least lighten up, and then they take those proceeds and they move into other areas. Okay, so the market, again, when you kind of think of it from that perspective, the market is always a rotational, arena environment, moving proceeds moving from here, and they're being put to use someplace else, right? So, I mean, how does that help us intraday, that discussion? It's not going to help you take an individual trade, but it will kind of give you some backdrop context in that the market is generally always just rotating back and forth between levels, right? And so that's the idea. We're trying to find, what are the most likely levels, and if the market gets dislocated, down below, where would institutional players more likely step in? Not guaranteed, but more likely. So those type of things. So we just context is always, um, important in that regard, right? So just trying to understand what's going on overall. Everybody see my graphic that I created uh, on the Twitter? All right, my PTG Market Insights. Um, it's on, yeah. All right, so I created something last evening. I was a little creative last night. A market breadth chart, but just basically a percentage. Let me just throw it up here. All right, and of course with the help of AI. But what I did is I described what I was looking for, and so this is simply a percentage of S&P stocks above their 3-day. Funny that I use 3-day, right? But 3-day simple moving average. Percentage of stocks above their 3-day simple moving average. I mean, it's, just a basic, what's the percentage of stocks above the 3-day moving average? And I just went back from March 1st to currently. So just, basically 2 months. But what it shows is, that again, as the market is trading lower here, right? Remember the percentage of stocks, right? So below their 3-day moving average, and then you start seeing them rise above their 3-day moving average. That's a change of character. And this is not futures. These are cash. This is S&P 500 SPX components, right? So that could also be a way of tracking breadth. All right, let me move that out of the way. So it's on the Twitter if you want to take a snapshot of it. Go on your Twitter, go on the X feed. Um, but that's just another way of kind of, looking at breadth. Yes, we look at breadth by the New York Stock Exchange intraday, advanced decline ratio, etc. That's very short-term intraday activity. But if you're looking for something like what's driving, the whole question is what's driving the market, and so breadth figures beyond advanced decline ratio intraday or tick numbers intraday can come into play as well. So percentage of stocks, above or below their, another way is above or below their 200 moving average, 50-day moving average. Again, my research on that one was simply percentage of stocks above their 3-day moving average, right? A little bit more um, directed to kind of the time frames, that we're doing, right? Also a bit more sensitive, all right? So you'll get different readings when asking different questions, all right? So that's the idea. So there's a lot of, you know, uh, there's a lot of different oscillators, the McClellan oscillator. I'm not going to go into all of those. You can research them, but there's a lot of different breadth, um, components. All right. But again, bottom line is, does that help any of that stuff? Does that help us intraday taking a decision intraday? I don't think it does. Not to the degree, to the granular level that we're in on an intraday basis. But the backdrop though is important because what we do on an intraday basis follows essentially what the big folks are doing on the larger degree basis, right? So again, always understanding what the larger context is and so forth, and where the kind of key inflection points and what's the underlying driver. Because remember, I look at it like what we do is like speedboats. We can navigate in and out in a heartbeat. Whereas these big institutional players, right? They're like, cruise ships and oil tankers. They take a long time to navigate a direction. So even like if you're managing your own IRA, like my IRA is just essentially my Roth IRA essentially is ETFs, right? Exchange traded funds, and I can shift, my allocations like overnight, like a speedboat. Though I don't do that, but the idea is you can have immediate commitment, right, to the market, right, or in a particular group. And that's the beauty. We actually, I think as individual investors, we have a much greater advantage than the big mutual funds, the way way we can navigate. But at the same time, we have to be disciplined to navigate, our own, you know, in a more methodical, disciplined way. And again, a lot of people perhaps don't have that skill, but anyways, for our purposes here, again, just monitoring the bigger picture and the breadth overall in the market, different ways of doing that, again, helps, give us some context. But again, like I said, intraday, should I short it here or should I buy it here? Intraday. None of that stuff that I've just discussed about broader breadth does not matter. It just doesn't. So, because it's what we're happening here and now is where we're making, our threes, fives, eights, whatever it is, not who cares about how many stocks are above the 3-day moving average. That's just more of a broader, paint stroke. So know what time frame you're playing with and what you should be looking at all times. All right, so still kind of looking for selling the bounces. We came close to the A10, didn't trigger. Again, that upper value area, developing upper value area 95s, right? And then back down here at the 80s, which I mentioned earlier. So, all right. Please explain the blue arrow 944 vertical line was above this 944. This one, this is a discount. That is a turbo discount. Okay, that's a turbo discount. So if we come down here, right, it's come down when it hooks back up. That is a turbo discount. Is it fair to say, what are you, an attorney? Is it fair to say an arrow without any white line or discount price is invalid? So the validity of it, okay, so all discounts, all premiums. So there's two ways of measuring that, right? Of looking at it. All discounts, all premiums are valid quantitatively. Okay, John and everybody? So they're valid in and of themselves. Why? Because they're signaling what they're signaling. In other words, right, the oscillator has moved lower into the discount area, right? And that's a valid signal. Okay. Now, whether or not it's valid qualitatively, right, in order to take a trade from that, okay, now that is where you need to apply your the decision making, process with that. Okay. Is it a valid trade? I mean, is it a valid signal? It's a valid signal. Is it a valid trade opportunity? Okay, may or may not be. All right, so that's where again we have to kind of identify, is it in the proper configuration? What do you need to see? Okay, so in this case, this blue arrow, which is a turbo, all right, I would I would not be taking that. Okay, it's not in the proper configuration, right? It is a discount in weakening conditions. Okay, so be sure to, again, I've outlined that in one of our videos, the difference between a discount that's in weakening conditions or a discount in strengthening conditions. Okay, that will lead you to whether or not, taking a trade, uh, is the appropriate action for that particular signal. Okay, so be sure to, double check that. All right. All right, back down to 80s. That's what we outlined for our sandbox. And here we go. We're coming up to the 810. Let's see if the 810 gives us something, or that. See if we get some love out of a trade. All right, so John says what he did is when price came above the A7, when it came back down, he shorted. Is that what you're saying, John? Kind of a peekaboo type trade, or look above and, reversal back down? Okay, good. All right, yeah. So that's a play too, certainly, right? I mean, there's just so many different ways of doing this stuff, right? Checking this stuff out, right? So if the price gets above an ATR, right, rotate back down below the ATR, that could be simply, you know, as John just described what he just did, that could simply be a trade. Is that valid? Sure. I mean, you're using the tools, you know. Um, this discount, by the way, could this be a BLT, Barbara Lopez type trade? Short below that low? 100%. Okay, 100%. So again, it all depends what how you're reading it. All right. So one way to read this is, when you're looking at this discount, right? It's a discount in weakening conditions, right? So right off the top of your head, if you're reading it as discount but in weakening conditions, you may want to flip the script and saying, well, if the discount is in weakening conditions, that's a potential BLT short trade. Because typically we think about discounts as a long, but again, doesn't, in this, in a configuration where the discount is in weakening conditions, certainly can be a short play there. And again, backdrop context, right, is also kind of critical here. right? What type of day type, what type of rhythms we have, could play out that way. All right, let's see what Mr. Market has in store for us. Again, we're at the A10 level now. Again, mine is not going to auto trigger because I have it set to the actual first touch, which happened during the overnight. But if you're playing A10 here, all right, it is a valid A10 to play in terms of the level. Whether or not we get any love out of that, we'll see. Ideally, we would want to see some sort of rotation down from here, but Mr. Market has the final say, right? Is it enough rotation to try to grab stops above? I don't know, we'll see. Or are they just more comfortable just pushing it up and then rotating it back down? The ATR 10 is up. You see it, Steve? It is up. Yeah, no problem. I did switch it back and forth, so yeah. All right, starting to get a little love out of this. I don't know, 10 o'clock. Let's see if we get a little bit further rotation down. Buyers still seem to be nibbling. A lot of times we have these 10 o'clock, top of the hour, bottom of the hour buy programs, sell programs. You always get to certain areas, high volume areas like we are. It's always going to be a battle. That's where again, there's high volume node areas. Think about it. That's where a battle is going to ensue, right? Buyers and sellers are going to be, chugging it out at those areas. All right, see if they can rotate it back down to this high volume node. Remember, low volume nodes are areas where markets can transition quickly. High volume node areas, right, are where prices tend to congregate, right, back and forth. So kind of think of it that way, all right, these, with the volume profiles. And that's more of an expectation, right? So when prices, when you're looking at high volume areas, I'm thinking a two-sided, kind of a battleground, right? When I'm looking at low volume areas, I'm thinking rejection type potentials. Okay, so in terms of that, so prices moved up, right, to an area where there's some previous high volume, right? So now price is back up there, and now the battle ensues, right? Do the bulls want to clear out whatever sellers are there and push it higher, or did the sellers stronger, right, absorbing the buyers and wanting to sell as much as they possibly can? So that's kind of where the battle is. And I think if you think about it that way, you're going to be, you're going to be fine in terms of expectation and areas. VWAP's down around the 90s, right? So again, pretty much flat. So if it's, again, if it conforms to typical cycle day two, again, the rotation back lower would be the expected move. Come on, Seabiscuit. But you can see the battle here, right? Back and forth. All right, so there is some net selling underneath the surface, bid-ask volume ratio, at least showing some net selling here. But again, it's not producing a move down yet, so that net selling is getting absorbed. Remember, the buyers pushed it up here, right? So the onus is on the buyers, right, to clear out the sellers, to absorb the sellers. All right, so again, that's the idea here right now. Didn't get much of a rotation. The buyers again seem to be a little bit more dominant here, even though the market's not breaking higher. All right, again, the buyers pushed it up, and sellers are there, but they're being absorbed. All right, maybe we will get a rotation down, but buyers seem to be have gotten majority of their fill. Yep, yep, they know. All right, we're long of A4 here. Let's see if they can push that back up into the retest the highs. So A4 long. Ba-da-dum, ba-da-dum, ba-da-dum. All right. Not much more. We get the first target on the A4. Tighten up the stop a little bit there. Typically, we like to get two targets, but tighten up the stop. Boy, we're getting down to my kingdom for a tick rhythm. Yeah, I think so. The market's just kind of, we get the earnings coming this week, again, like I said earlier. money managers, are not really committing anything. I mean, this is my experience having worked, on their behalf and so forth and talking to them over the years. They don't really make a lot of commitments, into earnings week. Uh, they're going to spend most of their time uh, parsing out, the reports. That's what they do. They do look at fundamentals. And so, their team, will dissect the earnings reports. So they typically won't do, they're not, these, although institutional players do day trade in a sense, okay, and like I said, more of a maintenance type bid or a maintenance offer. Um, into earnings, they're not like whipping around their positions. I mean, think about it. I mean, they're a cruise ship or an oil tanker. I mean, what good is that going to do them, right? They've made their commitment, they've made their allocations, so they really don't do anything into earnings season. I can assure you that's the case. I've talked to many of them, talked to my next door neighbor here. Same thing, you know. Um, so the markets tend to just kind of meander, into earnings season. Of course, the Fed, is on deck this week. And of course, the wild card will always be, the Iran situation, right? But again, not much that they can do about that, right? Markets can react, but in the scheme of things, the market does, stabilize. So so for our purposes, yeah, I mean, let's see, what's the average true range? Uh, yeah, so the average true range has been declining. Remember, as prices go higher, there's an inverse relationship to the average true range. So prices, with this rally, right, the average range has actually decreased somewhat. So that implies, lower and lower volatility. All right, well, that's what we have. Somewhat of a tight range. MATD, cycle 2. We are up at one of our targets here at 71.90. So all good on the home front. Yeah. Oh yeah. Yeah, that's the sandbox 80s 95s, 80s 98s. Yep. Yep. Just running through the charts here. Mm. Okay, well, not a lot to jibber jabber about here. These type of days don't warrant a lot of discussion. I mean, we see what's happening. All right, so again, in terms of planning, anyways, right? What would we want to see if you were, looking for, bullish move above, right? So you'd need to take out, right, the developing, right, value high. Okay, so we know the structure, right? Some sort of like this. If you're playing, if you're looking short side, right, developing value low, same type of kind of play, if you're looking for that. In the meantime, it's reversion, right? It's, you know, outside in type play. So, and you could be, sitting pretty much on your hands here. And what happens to a lot of people, at least I've learned over the years, I've encountered, speaking to many, many people, is like when we have situations like this where the market just, consolidating, balancing back and forth here, right? What I found is many people are, again, this is something I've observed over the years, like they're trying to like, I want to be the first one in when it breaks out. I want to be pre-positioned before the breakout, right? And so they're racking their brains right now, trying to look for any little clue that's going to give them, you know, the edge over somebody else before it breaks out, either higher or lower. And they want to get in there before anybody else. It's kind of whatever the need is, there. And I have certainly my own experience, but I've through others as well. Is like, well, how'd that work out for you? You know, how'd that work out? Why don't you just wait for the market to show you, what it wants to do, versus you're trying to figure out, what it's going to do next here while we're sitting in this back and forth range, right? With declining volatility within the range. So yes, explosive moves can happen, and then the reaction is, see, I knew it was going to happen. Nobody knows it's what's going to happen. Nobody knows. Just wait for it to happen. You're not going to miss anything if you know. I mean, that's the mindset of somebody that wants to make 2 or 3 points, on a big move. It's not really the case. If the market's going to make a big move, there's going to be plenty of opportunity, to get on that move as it's expanding. And I know it's hard to sit here and watch not a whole lot happening, but these are the periods where the market is compressing, it's building energy. One side is going to be dominant, right? Buy side or sell sides, some side's going to be victorious in this area. And so these areas where they, contraction, compression, it's times that they're building energy for the next move. So, got to be patient. Summertime rhythms. Yeah, it seems that way already, right? Well, I do think we have it right. Aside from anything happening overseas, that obviously could cause, some snappy moves. I mean, kind of discounting that. And I think the market overall is still discounting that unless something really, again, the market's not going to care for more bombing, you know, uh, but I think the market is kind of holding out that that's going to resolve itself one way or the other without any further, uh, you know, kind of squeeze them at their, you know, between their legs. But aside from that, I think we have it right where, coming into this week, earnings, FOMC, just markets just kind of tread water until there's some final clarity. I guess the vote on Warsh is coming. Yes, I guess the big holdout was this guy Tillis, and he's uh, signaled that he's going to vote in favor of Warsh. So there's obviously going to be a transition effect, when that begins to unfold. And of course, Powell will give his final missive this coming Wednesday, which I don't think it's going to, and nothing's going to change. He's not going to make any major decisions on any shift in policy. I think it's just going to, they're going to transition it to the next guy and ride off into the sunset. I guess the investigation uh, about the renovation is been dropped. So got a little snappy move here. More fun to capitalism, yeah. All right, so down to the lower edge of value, all right, and again, snap back up. So MATD rhythms as expected. All right. All these posts that I put up here, all right, again, a lot of this is designed to follow up on what I say, but also goes into when I do the recap, for the day, for the room, the activity in the room. So, again, the more comments I can put up there and what's happening kind of gets the flow of the recap. So for those that are not here, um, I mean, we have a number of different members that are still part of the group that unfortunately they can't make it into the room every day. And again, that was the reason why I started doing recaps, is they wanted to know, well, what happened in the room today? What were the trades? What was the flow look like? So being able to do recaps at the end of the day, with the help of Allie, my assistant. Um, but in order to do those, I gotta post. And your posts all go in there, by the way, as well. So if somebody's posting in the room, right, again, that all gets collated into the recap. So, feel free to post. All right, so I got another about 20 minutes on the stream. I'm gonna cut it off at 11 a.m. Uh, and that's kind of the time period that I want to. I don't want it to go much more than an hour and a half or so. Keep it tight, keep it light. Boy, how many times have we seen this rhythm throughout this past week, huh? Just a lot of sideways rhythm. All right, guys, we're at an hour 30 at this stage, and we're sitting here right in the middle. So, what I will do here is I'm going to shut the stream off. There's not much to be able to glean from this action right now. All right. So again, if you're looking for a bullish move, all right, obviously above a clear and convert, above the current highs, all right, for a move up. And of course, to the downside, it would be the same idea. All right, if you're looking for a potential rotation down. Right now, it's just neutral. I mean, you can see this VWAP. I mean, dead flat. All right. And you get the rotation from the high down to the low area, back up to the high. We're kind of in the mid. If it holds the mid, all right, if it continues to hold the mid, there may be a potential push higher. If it rotates back down towards the low, okay, then, again, an imminent move to the upside would be less of a potential play. All right, so we'll kind of see how that plays out. But that's kind of the framework. That's the framework right now. All right, and yeah, so we'll need to take a closer look and just pay attention to that overall. Yeah, John, I'll send you this. I'll send you the current June book that we have. Or do you just want do you just want the CCI ATA on the right? I can send you either one if you want the whole thing or partial. All right. All right. So I'm going to end the stream here, and we'll continue. The ATA is just fine. Okay. I'll send you that. Actually, what I'll do is I'll send you the analysis file. Okay, the studies file. All right, so you can put that in the data folder, and it's ATA version 2.1. So I'll send you that, and all you need to do is just apply it, put it in the data folder, and then it'll show up into the analysis studies, and then you can just apply it to whatever chart you want with the current settings that I have. Okay. Yeah. Um, yeah, I have a lot of different analysis studies. So how do here's how you do that while we're on here. So if you want to, let's just say you have a chart, any chart, doesn't matter, right? And you want to save the current studies, okay, the way they are, so you don't have to kind of rebuild them. What you want to do is you want to go into the studies on that chart, okay? And then down over here it says save studies as a study collection. And then in this case, I name this ATA version 2.1. And then I just select prompt removes existing studies. And then I want to save all. And that saves this entire list, all the studies that I have embedded in there with the various settings as a study collection. And then it goes into this folder up here, or this where it says analysis. And this is the studies collection. And then what you can do with that is you can create, again, whatever you want. And then that way, if something happens, a particular chart gets corrupted or anything like that, what happens is you haven't lost anything, right? So you can just, start a new chart and then apply the study collection and it'll magically reappear. All right. So instead of sending a chart book, I'll send you that. And then that way, you'll have that version. And again, it has to be a unique name, right? Otherwise, it will overwrite. You may want it to overwrite, but in general, it will overwrite unless you have a specific name to it. So pretty easy, but can be can be a lifesaver. If something happens, something gets corrupted. You know, it's happened to me. I can't tell you how many times over the years something happens, just it's not running right, things like that. So saving it as a study collection really eliminates that. So I'll send you the study collection file and then just dump it into the data folder. That's all you need to do. All right, cool. I will do that shortly. All right, I am going to cut the stream off here and we'll continue on.